people come to you with their money, investors like me, who may have earned it over the course of a career or a lifetime. There's emotion there. How do you separate emotion from the investment?
Yeah, I don't know that you can eliminate the emotions at all, but you can control them. The emotions are going to be a part of any decision, especially if you're buying a stock. You know, that's an exhilarating and fun thing. Yeah. You've done some homework, put some money on the line.
Sure.
You made an investment.
Yeah.
And you're not going to be wrong. So when that stock starts going up, the easiest thing in the world to do is buy a stock. The hardest thing in the world to do is sell it. Because it's going up. Are you going to sell it and take a profit? Because maybe it'll go higher. So it's a hard decision. Imagine for a second, I know this has never happened to you, Lou, but imagine if you buy a stock and it actually went down in value.
No.
Yeah, never happens. Now, if it's gone down in value, you're certainly not going to sell it and take a loss because you did all that hard work and research to buy the stock. So then you're going to wait it out, and if you're lucky enough for it to come back eventually at a break even, you're sure as heck not going to sell it now because you've waited this long for it to go higher. So it's a cycle, and it's a psychological cycle of selling. And I think the biggest thing that you can do is to introduce a set of rules to help not only know when to buy a stock, which is fun, but also know when to sell a stock, which is hard.
Give me an example of when you've used your rules to control maybe your own emotion.
I can give you a great example recently. We've owned Walt Disney in the portfolio for a long time, and it's been a stock that has performed exceptionally well for us. Well, as many of us know, there are some situations that caused Disney to run into some problems. No sporting events, no movie theaters, no theme parks, no Disney cruises. So Disney and their management made a decision to cut the dividend, to suspend their dividend. Well, as painful as that was for us as investors in the company, we immediately sold the stock. We only invest in companies that pay dividends. And the moment that Disney didn't pay dividends and it didn't adhere to our rules, we had to remove it from the portfolio.
But rules are made to be broken, they say.
Yeah, I used to try that line with my parents when I was a teenager, and it worked okay back then. But it certainly doesn't work in capital wealth planning. Not with our rules and not with your money.
Give me some rules.
Well, one of the rules that I think is kind of leading back to the fun part of the conversation is if we buy a stock and it's doing well and going higher, what's the natural tendency?
To let it ride.
Yeah, right, sure. That's
fun.
Baby. Yeah, that might be fun at the casino, but again, not an investment strategy. So we have a rule that says we're going to own 5% maximum allocation to any one stock, no matter how much we might like it. We're not going to put all of our eggs in one basket. So if that stock appreciates to a 7 or 8% weighting, awesome. But we're going to trim it back to a 5% weighting. We're actually locking in profits. So it's that old adage of trying to buy low and sell high. We still own the stock. We can still sell calls on it. We can still generate a dividend, but we've locked in some of that profit.
What I'm hearing here then is that selling's the key.
Well, I think selling's the discipline. You really have to know when to buy and when to sell. I know a lot of very successful and very wealthy investors. I only know a handful of very successful and very wealthy traders.
So when do you sell?
When do you sell is the biggest thing. In the capital wealth planning, there's 4 reasons in which we'll sell a stock. The first one we touched on, that's the fun one, old-fashioned rebalancing. We have a stock, it's doing well, we're going to trim it back and maintain that allocation. The second thing we also touched on with Disney, if a company cuts, suspends, or discontinues a dividend, we're going to remove it from the portfolio. We only own companies that pay dividends. And we actually look for companies that have a history of increasing those dividends. The third reason that we'll sell a stock is somewhat unique to us in that if we've written a covered call on a position, well, the stock could get called away and we may sell it because we're contractually obligated to do so. And we'll probably get into that in the next segment or two, but bear in mind that it's a third sell discipline. And again, you're selling something at a profit too, so it's another good way to take a profit. And the last thing, which I think is very important, is understanding stock price performance. If a stock goes down, it's not reason to sell it. We're not happy when a stock goes down, but it's the reality of markets going higher and lower. But if we have a stock that's down or underperforming its peer group or its sector by 15 or 20%, we remove it from the portfolio. What we're acknowledging there is there's someone on Wall Street knows something. If there's a reason that stock is underperforming its peer group, we want to get out of it, reset, and we can always buy it back. But what we don't want to do is hold a stock while it's falling to perpetuity.
When have you done that?
I can think of a recent example. We were able to get out of Boeing at a very, very attractive price using that mitigation technique. It eventually spiraled down far, far further and ultimately cut its dividend. Even a few years ago, we were protected with General Electric by exiting that at a very respectable price compared to where it eventually got down to into the low single digits.
Because these were companies that you would be inclined to hang on to.
Eventually, we would have had to sell them because they did both, in both cases, cut their dividend. But we got out much, much sooner than when the eventual dividend cut came into play.
With everything you've told us, what's the bottom line here?
We've established the fact that it's super easy to buy stocks. It's really fun, but it's incredibly important to have a sell discipline and to stick to it. There's an old song by Smokey Robinson that says, "I second that emotion." And at Capital Wealth Planning, we focus on metrics, not emotion.